Hey everybody, welcome back to the channel. Thanks for joining. Make sure to like and subscribe if you haven't already, and let's jump into it. So today we're going to be talking about my bull case for 2023 and how that's going to ignite, the stock market going higher. So as many of you know, 2022 is a big downtrend year. A lot of stocks were in brutal stage fours, not much hope in sight. But over the past few months, we've been seeing some sideways chops, so this makes us think maybe a bottom has been forming. So forming a bottom in the market is a process, not a single event in time. Bottoms take time to form. You need to transfer shares from weak hands to strong, and investors need a chance to reinforce/reevaluate their investment thesis. It takes more than a stock breaking out over a moving average. It takes a catalyst and a confirmation of momentum change. You need to see a change in the market participants' sentiment. Bullish RSI, the Relative Strength Index Divergence, is one way to measure that sentiment. So if you're a newbie trader, the Relative Strength Index may be something you never heard of. I'll call it the RSI from here on out. The RSI was invented in 1978 by the great J. Wells Wilder. RSI is a momentum oscillator, meaning it measures price's rate of change and compares it to the last 14 days of price movement to determine if the current price movement is increasing the absolute value rate of change, either to the upside or the downside. RSI has many uses, with the most popular being the overbought and oversold indicator. So just looking down at, RSI on this chart, overbought is when RSI goes over 70, and oversold is when RSI goes under 30. While the many uses of RSI are important, today we will look at my favorite use for the indicator, identifying bullish divergence. So bullish divergence is very simple in practice. We see price makes a lower low or an equal low, while the RSI makes a higher low. So here's an example for you. We're looking at the chart of Fidelity National Financial, FNF. So throughout 2022, we see our peak here in January, and we get a lower low here in February, a lower low here in April, and then a lower low again in June. Price then trades a little bit higher until the end of September, and we see another pullback down into October, making our equal low. So taking a look at the RSI, during our lower low in price, RSI also made a lower low. It drifted higher, the same as price did, up until the middle of September. But when it came down, we see a divergence here. We see that the lower low and the equal low was not duplicated on the RSI. Instead, we get a higher low, and this lets us know that something important is happening. So, what does that mean from a technical standpoint? Sellers were clearly in charge for most of September 2022. This can be seen with our big pullback in price. There's no denying the fact price went down. What is important to note is that RSI did not make that equal low. Again, RSI measures the momentum of change in price. With the thrust down in price that we saw in September, we did not get an equal thrust down in the RSI. This means that buyers are putting up a fight to protect that low in price, and momentum is now shifted to the buyers. Even on the next down move in price, we saw down here, FNF made a higher low at the end of 22, and the bullish divergence RSI line was respected. We saw that right here in December. With our higher low in price, we also got a higher low that respected the bullish RSI divergence line. This is even more confirmation that sellers have lost the momentum. Now all we need to see is follow through of price through the 4088 pivot, and a stage 2 breakout is in progress. So moving on to our next example, we're going to take a look at Southern Copper Corporation. So Southern Copper is another textbook example of the bullish RSI divergence, telling you that the bulls are taking control even before there's a breakout in price. So we saw Southern Copper come barreling down into this 45 level. Again, just another series of lower low. And then it drifted sideways for a month before continuing to make another lower low. But what is the RSI telling us? During that whole sideways price movement and lower low, RSI was telling you that there's more than meets the eye in SCCO. There's a clear pattern of higher lows in the RSI, even with price drifting down. So here we're looking at the end, the middle of July. There is our anchor point, and then we keep drifting higher on the RSI. So after price formed the lower low in September, Southern Copper rocketed higher and transitioned into a stage 2 breakout when it broke over this 51.37 level. Price has not looked back since and is up 50% from the stage 2 breakout pivot. So again, all you have to do is look for price to diverge from the RSI, and we want to see the RSI drifting higher while price is either drifting lower or while price is drifting sideways. So now you may be asking, okay, Jeremy gave an example of a boring insurance stock, and he gave an example of a stock that's already broken out and went up 50%. What are some stocks sporting bullish RSI divergence that have potential to profit in 2023? That's a great question. So let's hop into it right now. And here is a list of stocks that have a bull case for 2023 in no particular order. First off, we're going to take a look at Texas Instruments. Texas Instruments is a boring analog chip maker and calculator maker that many people know of and use their products, but few people think of as a sexy investment. Unadjusted for dividends, which Texas Instruments pays a lot of, Texas Instruments is up 1,237% from the 2008 lows. From the 2008 lows, and the NASDAQ 100, the Qs, is only up 993% during that same time period. This is a 244 percentage points of outperformance and a clear indication that Texas Instruments is a stock that investors should put in their portfolios. The thing I love most about Texas Instruments is its current technical outlook. So to fit the theme of today's article, we are looking at bullish RSI divergence. So Texas Instruments hit its bear market low in the middle of June 2022 and came back down to an equal level in September of 2022. Looking at the RSI, the indicator made a lower low in June, but made a significantly higher low in September. That is the bullish RSI divergence that we're looking for. Texas Instruments bear market has been extremely mild when comparing it to many of the other QQQ members. This added relative strength, along with the bullish RSI divergence, is a strong catalyst for Texas Instruments to reach all-time highs if price can clear the $185.38 price level. So once we get above this previous resistance, I see no reason why price could not go back up to this all-time high of 202.62. Next up, we're going to look at T. Rowe Price. Unlike Texas Instruments, T. Rowe has experienced a brutal bear market. After peaking in 2021, T. Rowe fell 58% until it found a bottom at the end of September. All the time, T. Rowe is making lower low after lower low after lower low. The RSI was telling you to begin looking closer. Lower low, higher low, higher low. The series of lower lows in price was not confirmed by lower lows in the RSI. On the contrary, the RSI was diverging from price. RSI respected the bullish divergence RSI line for all of 2022, and price is now making a move higher after the first higher low since the bear market began. T. Rowe is a low debt, high return on equity company that pays a huge dividend and is committed to growing that cash flow to its shareholders. If you're looking for some price appreciation to go with that dividend, T. Rowe looks primed for a stage 2 breakout if price can break above the $133.34 pivot. Next up, we're going to take a look at PayPal. So PayPal is a company who's broken many, many hearts over the past year. Retail investors and Cathie Woods piled into PayPal when it was up huge after the post-COVID boom in growth stocks. Since peaking in 2021, PayPal went on to lose 78% of its market capitalization. That does not bode well for an investor looking to make some gains in this market. Well, if you're smart enough to get out of PayPal before the huge decline, and now you're wanting to know when to re-enter, Now is your time to start paying attention. After a series of lower lows, lower low, lower low, lower low, with no divergence from the RSI, lower low, lower low, we finally saw a shift in sentiment in June of 2022. So lower low, now we make a higher low in the RSI. After a brief run higher, PayPal pulled back and formed a double bottom in December of 2022. To accompany the double bottom, PayPal had formed and respected a bullish RSI divergence trend line that we're seeing down here on the bottom of the chart. This formation of technical patterns gave us a clear signal that bulls are in control of price, and a move above the 91.03 pivot puts PayPal back in stage 2 breakout territory. So to conclude, bullish RSI divergence is a signal that price momentum may be shifting from bears to bulls. With price making lower lows and equal lows, RSI is making higher lows. This is a bullish momentum bubbling within the stock, and all that it takes is price breaking above a key pivot to push the stock higher. Bullish RSI divergence works on any asset, whether it be equities, bonds, commodities, ETF, currencies, etc. 2023 may be the year of the bullish RSI divergence breakout if there are a sustained number of assets successfully moving off their 2022 lows. As a little treat, I'll leave you with a weekly chart of the S&P 500. Do you see anything important in this chart? Thanks for watching. Again, subscribe and like the video if you haven't, and have a great day.